Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We were glad you're here on a Friday afternoon. I am Cesar Delgado. I am your host of today's program. Next week, I will not be here for next week. I will send them to my friend Todd Gleason. However, I will be interviewing with Dr. David Anderson from Texas A&M about the hog's health. Dr. Anderson is a veterinarian for Texas A&M. I will be interviewing with Dr. Aaron Hanger from the University of Illinois in Ottawa, Illinois at the LaSalle County Farm Bureau. I will be asking him about dicamba and 4-2D for this growing season in the field. I will be interviewing with duwany Bussey from Bold Marketing LLC on today's program. Otherwise, this is your rural news sponsored by AgriGold. This week was the Commodity Classic in Denver, Colorado. The grains markets are down during the Commodity Classic. The tariffs is on for Mexico and Canada. However, the president will be negotiating with Mexico and Canada over the border with fetal and illegal immigration in the borders. Finally, on March 25th at 10:30 a.m., there was a weeds presentation from the University of Illinois Extension in Ottawa, Illinois at the LaSalle County Farm with Dr. Aaron Hanger. The weeds presentation from the University of Illinois Extension. This has been your rural news.
Well, the status is, at least for now, that tariffs are in effect on Canadian energy of 10%, and that is going to start trickling down to the end user in the weeks ahead. But there's certainly a very different situation depending on where you might live across the U.S. The Northeast, the New England area generally receives refined product from a Canadian refinery. Those areas will see impacts faster. But in the Midwest, refineries generally process a heavy slate of Canadian crude oil due to the nature of how slow that crude oil gets into the United States and then takes time to be refined. The impacts throughout areas of the Midwest, the Great Lakes and the Rockies will probably see a much lower level impact that is much more delayed than compared to what we expect in New England.
1 million barrels of oil from Canada for the Midwest and Northeast West Coast for every day. The tariffs is going to be impact on the gas prices by these tariffs for Canada.
A lot of what Canada sends us at 4.5 million barrels of oil per day, Canada is the largest source of crude oil imported in the United States. And a lot of what we use here in the Midwest has been fed by Canadian oil through U.S.-based refineries. So a good portion of what you may be farming with in agro-consumption, as well as things like gasoline and jet fuel, is derived from that Canadian crude oil, the 4.5 million barrels a day that flows through much of the United States Midwest.
Patrick Deathman from Gas Bubby. Petroleum prices are high from the tariffs from Canada.
The difficulty in making such a simplistic argument is that it ignores the status quo for the last 60 years. Prior to the U.S. shale revolution that has just been in existence for the last decade or so, the U.S. was not a major oil producer, and much of the oil that we were receiving inland was from Canada. And so our systems have been built around that stable supply of Canadian oil that's existed for the better part of 5 decades. That is not something that can be easily replaced overnight. Primarily, crude flows south from Canada into the United States. And what you're proposing potentially with using more U.S. produced crude oil in these refineries wouldn't be able to be possible because the pipelines generally would need to be reversed. And more pipelines would need to be built at great expense and considerable time. So it is not feasible that the U.S. simply would just cut off Canadian oil and use its own oil because it's much more complex.
It's made difficult to bearing to make a deal with our trade partners with Canada for the oil prices. Thanks to Stephanie Hoff from Midwest Farm Report in Wisconsin. This is your commodity markets for this afternoon, sponsored by Kyle Bumstead from Allendale Incorporated. Corn futures is up for today, and beans is up as well. May corn is up at 5 to 4/4. July corn is up at 5 to 10 cents. December corn is up at 5 to 9 cents. May beans are up at 5 to 9 cents. July beans are up at 5 to 10 cents. August beans are up at 5 to 10 cents. Chicago May wheat is down at 3 to 6 cents. Chicago September wheat is down at 3 to 6 cents. Let's see what happens to the livestock markets. April cattle is up at 5 to 10 cents. June cattle is up at 5 to 10 cents. May feeder cattle is up at 3 to 6 cents. June feeder cattle is up at 5 to 10 cents. April hogs is down at 3 to 6 cents. June hogs is down at 3 to 6 cents. This is your What a Week with the Commodities Classic in Denver, Colorado. We were talking about the commodities markets with Duwany Bussey from Bold Marketing LLC. Welcome to join us for the show. I am excited to have you.
Well, thanks for having me on. I'm excited to be on too. Kind of a new listener to your YouTube channel here, and I got to say it's been good this week. A lot of the heavy hitters on there. Hopefully, I can just live up to it and give you a good insight on the markets this afternoon. What a crazy week, right?
Yeah, pretty sure. Duwanya, how concerned about it with the beans markets for the planting intention report on March 31st?
That's a good question. I think the market wasn't worried about it all until the ag outlook forum. But when that came out at 84 million acres from USDA, I think the market got just a little bit nervous, thinking, wow, all of a sudden our ending stock drops a little bit. I think USDA had it around 320 million bushels. I got to tell you, I'm probably even just a touch lower than that. I think I'm at 83.5 million acres for soybeans. But we can probably stay closer to that 84. I don't know. I'm ranging back and forth, which like typical brokers we do. Now, the reason I'm not that concerned is I have export demand down rather sharply. I'd say 200 million bushels from old crop year to new crop, because not just because of the tariffs, but that's concerning too. But this huge Brazilian crop size we've got coming, I think China's going to be able to buy more soybeans from them and less from us. So my ending stock goes still all the way back up to 600, even with the lower acres. But the biggest reason why I'm not that concerned is I'm in Northeast South Dakota, and we're kind of the king of the prevent plant area up here, and that's not a popular thing. We'd rather farm it all. We don't want to, settle for prevent plant. So, but I think we'll have less prevent plant this year, and I think we're going to have more acres available for corn and soybeans.
How are the technical aspects on the May beans after the close from this morning?
Yeah, a quieter day, which I think everyone will be happy with. May soybeans down 2.25 cents today. Technically, I feel like we're range bound. I really do. I think you see a low at $10 that I don't think we want to go below because of just what we mentioned. The market doesn't want to lose any more soybean acres, but I don't think we can really push above $10 either because of the big crop coming out of Brazil. So I think we're kind of range bound in there. And actually, that's what the technicals show me as well.
What is your thoughts on the planting intention report on March 31st for the Northern Plains?
Yeah, it's going to be an interesting one. That's always a big market mover, and it should be. We debate yield all summer long, but you think about it, whether you plant a million more acres or not, that's a big difference in the yield. So, it can be as far as total bushels is what I'm getting at. So that's a big report. I almost probably kind of got ahead of you there a little bit, started talking about this acreage report. I'm looking for, let me get my numbers up to date here. 95.5 million acres of corn, and I'm looking at 83.5 million acres of soybeans. Now, whether or not USDA prints that or not, that's where I'm at for now. And believe it or not, that still doesn't really make the corn market that bearish, even those amount of acres. My concern is I just don't want to see a print of like 97 million acres of corn. But if they do that, I think you don't have enough soybean acres, and they both probably rally anyway.
What is your thoughts on the cattle markets for right now?
Oh man, what a week they put in. Come Monday and Tuesday, this market looks lousy and headed straight down. And for the most part, I got to tell you, I wouldn't say I've been a big bear, but well, yeah, I would say I have been bearish to the cattle market, but I've really been pushing guys to hedge. I just look at these prices and go, guys, this is a lot of capital investment you've got in your feeder pens here. Let's buy LRP, let's buy put options, keep the upside open because the supply fundamentally is bullish. I get that. But what a reverse this week. And the trade action just looked phenomenal and just took off before we heard anything about any fundamentals. Box beef didn't move. The cash market Monday and Tuesday was actually lower. And now, sure enough, we find out today as this futures market rallies for several dollars the last few days, cash market coming in around 200 to 202 in Nebraska now. So man, this cattle market looks white hot right now. The $1 million question is are we going to go back to the old highs? I don't know. I wish I did. It looks white hot for now. Feeder contracts from September on back through August on back are all making new contract highs. They look strong. It's really odd to me that the March feeder contract isn't playing along. That's not a great sign when we're bear spreading in a bullish market, but these cattle markets are generally crazy. So, boy, Mike, to answer the question, it looks friendly, looks great right now, but boy, on Monday it looked horrible. So stay tuned.
Do you have some concerns about the prices still in the economy in general? Otherwise, the stock market was down yesterday.
Right. Boy, that's a great thing you brought up there. Stock market, US dollars down. And normally that would affect the cattle market, and it's been the complete opposite from Tuesday on. Yes, it is a concern of mine, and that's probably why I hesitate to tell you whether I'm bullish or bearish the cattle market because I'll be honest, what I tell my producers is, guys, it doesn't matter what I think anymore. Once you get to these high prices and you have profits, I just want them to hedge and use risk management, no matter how they want to do it, if it's LRP, put options, or just sell the board. I am concerned. What goes up must come down, right? I mean, this cattle market feels a lot like when we were at $8.50 corn and everyone said there's no use selling because it's going to 10. And you know how that turned out. We were down to $6 by fall, or actually just a couple of months later. So yeah, I am concerned about the US economy. I mean, not the economy in general, but I am concerned about, can people really pay for this high priced meat?
When is the fundamental for the cattle on feeds?
They're still bullish, and they're going to stay that way. That's the one thing is you can't just rebuild this herd overnight, right? But I will say this winter, I think we had more people starting to keep heifers back. And I heard of cull cows, cows that were found open when they preg checked. And I think they stayed in the herd instead of being sold because the guys who are out there buying kill cows can't find them. So there is some signs of building the herd. But even though I'm talking about that, that's a year out. So cattle and feed reports should remain bullish and strong for the next several months.
Finally, what is your thoughts on this spring season?
I think, well, about like this week, I think the spring season is going to be volatile in the markets. We're obviously chasing headlines, but I guess I tell people don't worry about the tariff stuff so much. There was a whole lot of tariff talk this week, but did it change the global supply of corn? And I'll answer my own question there. No, it didn't. So I'm looking forward to it, but I'm a farmer as well up in Northeast South Dakota. So we're always looking forward to spring. I'll report back to you whether we're getting it all planted fence row to fence row and if are those extra acres out there. But I'm excited for the spring, just like every other producer.
Where people can find you for your consulting services for their grain marketing?
Yeah, I think going forward, they can call us here directly, 605-448-2365. And they can also check us out online at boltmarketingllc.com. We'll see if we can match up and get a good marketing plan for them.
Thanks, duwany.
Hey, thanks for having me. I enjoyed this.
This is duwany Bussey from Bolt Marketing LLC on back roads of Illinois. Thanks to duwany Bussey from Bolt Marketing LLC. This been back roads of Illinois. You have a great day.